We've been talking a lot of bullish narratives about just how seasonably strong this year can be. Do you feel as though you're that positive about the markets right now near record highs?
Well, good morning, Dom. I'd like to look a little bit more into the distant future for these sorts of things. Our investors tend to be longer term, but it's shaping up to be a good season because the consumer still remains very strong. The household balance sheets has high savings in it, despite the inflation, in fact, which is caused by those strong household balance sheets and the very strong consumer demand that we're seeing, really does set the equity market up for a good run. Inflation remains a risk. COVID remains a risk. Obviously, what we're seeing in Europe is pretty disturbing. But production continues to come back online. Look at the automakers, for example, and look at Williams-Sonoma's results last week, which really reinforce that strength in the consumer, which I do think is giving a number of stocks opportunities. But the market is a little bit on the expensive side, still supported by earnings. But really, I think investors at this point have to pick and choose
So, Joanne,
to see.
Yeah, Joanne, I was saying, I mean, the strong consumer has been the underpinning for the global markets, you could argue, the strong U.S. consumer for years now. Do you feel as though the supply chain issues are largely behind us, or do you feel as though they'll still put a crimp on some of those companies that do sell to that strong balance sheet U.S. consumer?
I think the supply chain issues are easing a little bit from the data we're seeing. I mean, look at the shipping rates. They've come down dramatically. They're down back at April levels, which is a very good sign. Semiconductor shortages are still out there, but apparently the auto industry, for example, is getting enough to continue to produce in all of their factories at this point in North America. So things are clearly easing, but I think there's still a long way to go. Europe clearly has a problem with potentially some more shutdowns going beyond Austria. So, I think we have to really wait and see and be prepared and look for companies that can handle the cost increases and have the pricing power, like, for example, Williams-Sonoma does, to be able to pass those on and maintain their margins.
So Joanne, one of the industries or sectors that has pricing power or is thought to have pricing power is technology. Is there anything in your mind that tells you that the tech trade is something that continues to maybe power the markets? And if so, where do you find value there?
Right. The advantage that tech has is that, first of all, it's usually not very labor intensive. So they're going to suffer a little bit less from rising wages. And some of the tech stocks that are out there really have pretty attractive valuations. Look at a Qualcomm, for example, or a Broadcom. And both of those have strong multi-year secular drivers. And that is really what investors need to look for to power through these risks, because those are the sorts of companies that aren't going to be disturbed that much, even if COVID, rears its ugly head more broadly around the world. And even if inflation picks up. So it's a good combination of secular growth, low wage pressure problems, and opportunities to potentially expand margins. And that's a great combination for investors to look for.
All right. And I'd be remiss if I didn't talk to a stock picker like yourself about the holiday shopping season. Do you feel retail beyond Williams-Sonoma is still going to be something we should focus on?
Yeah, you have to look at the different segments of the consumer population. Those at the low end really are going to be suffering from inflation, yet some of them are now starting to get jobs for the first time in several months, and that's going to help their spending power. But if you look at a TJ Maxx, bargain opportunities, so if there are some budget constraint problems for consumers, they're going to shop more there. A Target, we think, continues to do well. And, beyond that, in consumer electronics, we should see a pretty good season this year with all that money piled into household bank accounts.
All right.
So, we've held a lot of these for a long time for our clients, and we continue to be pretty enthusiastic about some of the companies in that space.